Travis, there's been a lot going on in the world of investments. Let's boil it down and talk about some of the key things driving the markets. First, let's talk about something that we haven't talked about at all this year, which is inflation.
Right.
Data says inflation has been moderating, which is obviously good news. So the upside risk for inflation is diminished, letting the Fed focus on the downside of unemployment, the unemployment picture, which is something that we have seen softening here lately.
Yeah, it has, Steve, a little bit. That has been fluctuating. But inflation, and unemployment, it leads to monetary policy, when people think about it. So all eyes are obviously on the Fed's meeting next week, and where Chairman Powell himself has said it's come time for policy to adjust. And the expectation is for Fed to cut rates next week. The question now is if it's just going to be a 25 basis point cut or something higher. And we've seen, the market expectations, vary day to day as new economic data points come out, and how that's going to affect the Fed's decision. So overall, though, Steve, as rates have actually moved lower in expectation of, the Fed cutting rates, bonds have actually done well in this environment if you're looking over the past year. And they're actually acting like a hedge in the portfolios again. So that's maybe some good news on rates coming down.
It really is. And another theme we've talked about, Travis, is top-heavy markets. The AI euphoria has had an outsized effect on a select handful of stocks that investors feel benefit from this AI boom. And the typical suspects is NVIDIA, Alphabet, and Apple, just to name a few. This extreme concentration at the top of the standard indexes makes them more fragile, obviously, or susceptible to downside moves that where if these companies fail to meet market expectations, you're going to see a lot of pressure on those indexes. So it makes sense to broaden our thinking and examine other opportunities just beyond the S&P 500, doesn't it?
It does, Steve. And we saw that even with NVIDIA's last earnings report. They beat market expectations, but not by enough.
Right.
So markets punished them for it. So those expectations are very high, and they're also tied to like earnings expectations, and we've seen a lot of those revised higher lately. The question is whether companies can continue to grow earnings per share, which really comes from, if you boil it down, it comes from revenue growth, it comes from expanding margins, and buying back shares. We've seen margins for retailers like Dollar General or Dollar Tree actually narrow here recently because the lower end consumer is really struggling with the overall compounding effect of inflation over the past few years. On the other side of the economy, we'll call it, you've had higher income consumers continue to spend. If you look at margins for companies like Louis Vuitton, or you go to an extreme example like Ferrari, they've been able to defend them and they've remained consistent. So there are really two distinct areas of the economy right now, depending on who you're talking to. So.
Yeah, and Travis, we can't forget politics.
Oh, thanks.
with the presidential election dominating the news cycles, we have a debate this week, which will generate, obviously, a lot of attention as voters are looking for answers from both candidates on potential policy coming up, right?
And yeah, I mean, unfortunately, you're right there, Steve. And I think people maybe give too much attention to what's going on in politics.
There's no question about that.
And that uncertainty and that attention will drive short-term volatility in markets. Always does. Yeah. Historically, if you go and you look back, you see that. But remember, again, historically, if you look back, markets, after the volatility subsides, they don't really care who gets into office. They just want to know who it is. They want to remove that uncertainty.
That's right.
And understand who's going to be in office. And over the long run, we've got the charts. We'll show you. Yeah. The stock market climbs no matter who's in control of the White House.
Capitalism is very much alive and well, and that's a perfect example of the charts that we will show in the future.
Should stay that way.
Yes, exactly right. Travis, this has been great. I look forward to it next week.
Look forward to it as well.